Hi, I'm Ernest, and today I'm going to tell you how the bounce strategy from support or resistance levels can help you make money. This is the foundation of technical analysis and trading as a whole. I often get asked about a profitable strategy on the Pocket Option platform. By the way, if you register now on our platform and enter the promo code that you can find in the description of this video, you'll get a 50% bonus on your deposit. Traders often act intuitively. Can you trade intuitively? The answer is, of course, yes. You can, but then it all turns into some kind of game like roulette. We bet on red or black. That's not what we want. We want confidence, calmness, and an understanding of what tomorrow will bring. In general, to sleep peacefully at night, let's move to the chart and see what the strategy is all about. Before we move on to the main rules and conditions for entering trades with our strategy, it's important to understand what support and resistance levels are in general. As we can see on the chart, the price came into this area above our candles twice. Here's the first time and here's the second. The price also came into exactly the same area, but this time at the bottom of the chart. A total of 4 times. So that's the first, second, third, and fourth. What does this mean? This means that a certain pattern has formed. The graph constantly comes into one area or another and cannot overcome it. So there is a reversal in the price movement. That's what support and resistance levels mean. What we have above the candles is the resistance level. What we have below the candles is the support level. Traders often make the mistake of drawing support or resistance levels using a simple horizontal line. They see a rough intersection and place it roughly like that. But in reality, that's a mistake. You need to understand and take into account something like the margin of error. There can be margin of error everywhere. The price on the chart can't bounce off your horizontal line perfectly. So it would be more accurate to represent this using a rectangle, meaning using an area. We choose a rectangle, narrow it down a bit, bring it to our area and try to align it with the end of the candle's body and the end of the wick. Accordingly, we draw it as horizontally as possible and already see something more visual. What are the advantages? When you display support and resistance levels using an area instead of a line, your brain automatically starts to understand that the price will bounce roughly off that area. So your brain won't focus on the idea that the bounce should happen exactly from that horizontal line, which will make it just easier and more convenient for you in your future trading. You also need to understand that not every trading asset, not every chart allows you to determine the support and resistance levels. The same goes for Solana, just a slightly different segment of the chart. We see that each candle's low is getting lower than the previous one. So basically, here we see a clear trend direction, but we don't see any support or resistance levels. And that's okay. You just need to look for those assets, those currency pairs, where you can see this pattern, and it will help you. All right, we've figured out how to schematically display support and resistance levels on the chart and how to find them. But why do they form in the first place? Let's talk about this moment. Let's break it down using our asset Solana OTC as an example. OTC stands for over-the-counter market, and Solana is a cryptocurrency asset. You can buy and sell it not only on our platform, there are other platforms where the concept of a pending order for buying or selling exists. So we can decide to make a purchase not just at the market price like on our platform, but we can place, so to speak, our request to buy this asset at a price, say, of $100. This is what is called a pending purchase. When a large number of pending buy orders or pending sell orders accumulate, such levels are formed. So it's just that the strength of buyers, or conversely the strength of sellers, isn't enough to quickly overcome these ranges. We talked more about this in our Telegram channel. We already have a large friendly community of traders, and once a week there's a bonus of 50% for topping up your deposit. All right, we've figured out the support and resistance levels, but actually, to complete this strategy, I want to add 2 classic indicators that will make it work even better. On my screen, you can already see the MACD indicator. Let's remove it and add it again. How do we do this? We go to the Indicators section and select MACD. We see an additional indicator appearing at the bottom of our main chart, and that is the MACD indicator. Here we can adjust it, but I recommend leaving the default value. We won't dive into that right now. We also need to add a second indicator, the RSI. These are considered 2 of the most classic and effective indicators that work very simply. Let's take a look at the same chart with Solana OTC and see what happened when the price entered the resistance area and then reversed back. We see that we had a sell signal according to the MACD indicator and according to the RSI indicator as well. So, because we not only identified the resistance level, but also saw 2 signals from the 2 indicators, we could make a decision to enter a sell trade with 100% certainty, expecting a bounce from that area. Now let me explain why I see a sell signal on the MACD and the RSI. We see two lines and a histogram. Our main line is the green line and the red line is the signal line. So if the green line crosses the red line from top to bottom, that's a sell signal. If the opposite happens and the green line crosses the red line from bottom to top, that's a buy signal. As we can see, that signal was indeed in this area. How does the RSI indicator work? It's also simple. We see three lines with parameters 30, 50, and 70, along with the main green line that shows the price movement on our chart. If the line goes above the upper line, which is 70, it indicates that the market is overbought and you can confidently open a sell trade. If the green line crosses our lower line, where it says 30, it indicates that the market is oversold and you can open a buy trade. In this specific example, all the parameters we can pay attention to came into play. So that's both the resistance level and the signal from the MACD indicator, as well as the signal from the RSI indicator. This is a perfect example of such a trade. Let's try trading with this strategy and make some money in real time. It's also important to mention that when using this strategy, we aim to achieve the best possible results. So we're looking for the scenario that just happened, where everything aligns with technical analysis at the levels, and we see the signal we need from both indicators. But it happens that indicators differ in opinion, but it is enough for us to find confirmation in at least one. That will be enough to make a large number of profitable trades. I found a suitable situation with the Polygon OTC asset. We are currently on a 30-second time frame. Basically, I recommend switching between different time frames. Right now, I'm on the 15-minute chart to see more clearly. In this case, it's the support level. We can also switch to a 5-minute time frame to see how it looks. And after we've confirmed on different time frames, we switch to the 30-second one chart to look for a good entry into the trade. According to the MACD, we see the signal line crossing downwards, so we can already open a buy trade for $400. According to the RSI, if we look at it, we also see a buy signal, but it was a few candles earlier. In any case, this fits the parameters for opening our trade. Let's wait for the result. Excellent. Our deal closed in plus. I opened it for 1 minute. The expiration time of one candle is 30 seconds. In principle, I advise you to do exactly the same. That is, if you are on a minute chart, for example, that is one candle equals 1 minute, open a deal for at least 2 minutes. More is possible, but preferably not less. Let's look for another situation. I found an obvious level of support on the Bitcoin ETF on the OTC. Let's move to the minute candle time frame, and we see that again, MACD crossed the signal line from bottom to top a little earlier, so we can open a buy trade for 2 minutes, as I already said earlier. Since our candle chart is on a 1-minute time frame, we open the trade for at least 2 minutes. Aerosite also had a buy signal earlier, as the green line was under 30, indicating oversold, allowing a buy trade. Signals from indicators may come later than expected, but we use indicators to ensure no breakout at that moment. It's not a big deal if the signals from the indicators come to us a bit later than when it seems like it's time to open a trade, because first and foremost, we use these indicators to understand that there won't be a breakout of the level at that moment. Can there be breakouts? Of course, there can be breakouts. If there were no such breakouts in principle, then the market would always move in a certain price channel and would never be able to get out of there. Of course, this is not so when we see two signals on the indicators, even if they were a little earlier, then it's okay. The most important thing is that the general pattern basically looks like a buy. Let's wait for the results of our trade. Once again, our trade closed in profit and we made 768. Great. I would like to give an example where the indicators are telling us the opposite and we shouldn't enter the trade. As we can see, an obvious support level is forming here. You can place it right here, and the price is actually reaching this area. So this is already the 4th time it's touching this level, but at the same time the MACD shows a sell signal and the RSI doesn't show a buy signal. So this line hasn't reached a level below 30, which means there's no buy signal, and in this situation you shouldn't rush to enter a trade. Since we didn't get a signal from the indicator, we just move on to another currency pair or another asset and look for something better. We've gone over the parameters we need to rely on before entering a trade in detail. Let's talk about money management. What amount of the total deposit should you enter with? You can use a classic basic trading strategy, which means you enter a trade with 1% your total deposit amount. This will allow you to make a profit in the long term with minimal risks. I don't recommend averaging trades with this strategy, meaning multiplying the entry amount by 2 after a loss. This is a more individual matter. This was Ernest, Pocket Option Platform. You can find more of the same interesting videos on our channel, and if you liked this video, then put the bell and subscribe. Goodbye, everyone.